So let's look at it. Why do I have a line underneath support? Because support is going to act as the floor for a stock, okay? So stocks bounce off of support. Support is your floor. Why do I have a line over resistance? Because resistance is your ceiling. So resistance is where the stock is rising. It finally gets to a level where sellers want to prevent it from rising more. So it rejects off of it. Okay, so resistance is our ceiling. Let's take a look. So again, support equals floor. This is your wall of buyers. So if a stock is going down, right, it's going, whatever, it's in a downtrend, it's going down, and then it starts bouncing at a specific level. So like you can kind of see in this little diagram at the bottom left, stock is coming down, bounces off a level, and then it retests that level and bounces off the same level. That's considered a support. So support is literally a wall of buyers that prevents the stock from falling, right? These are people who want to hold up the stock price, right? They think it's too low, whatever. They want to hold the stock price up. They want to prevent it from falling below a certain level. And that's what's called support. And that's how support is created. So stocks bounce from support. With enough selling pressure, a stock can break support. Okay, so support, yes, is going to be your wall of buyers. But if there's enough selling pressure, you know, enough people want to short sell, they want to buy puts, it's a very bearish stock, then it's able to break that support, okay? With enough selling pressure, it can break that support. However, if a support is broken, that old support becomes new resistance, okay? So if the stock is coming down, we create a support, right? A wall of buyers comes in, and the stock bounces off that level a few times, but then it breaks through the level, that old support will become new resistance, okay? So if Apple is coming down, Apple is in a downtrend, and it starts to hold 210, right? Apple is holding 210, 210 is our support. But then there's enough selling pressure, it's able to break 210. Now we're below 210, so if Apple goes back up to retest 210, the 210 will be a new resistance, okay? And same thing with resistance. You will see strongest, and this applies to both support and resistance, strongest levels will be at whole numbers, okay? Especially big whole numbers like 1,000 or 1,500 or 2,000, or even a smaller scale stock, 100, 150, 200. At those very big macro levels, is where you will see the strongest support and resistance. Just something to keep in mind, all right? You typically won't see a random level like 182.34, okay? You're always, most of the time, going to see these levels around these whole strong levels. Now resistance. Resistance is our ceiling. So I want you to think about it like you have a bouncy ball, right? Support, if you have a bouncy ball, you throw it at the floor, it's going to bounce off of the floor, okay? So that's what happens with the stock. When you get a wall of buyers, you throw a bouncy ball at the floor, it's going to bounce off of the floor. How many bounces do you need for it to be considered a support? I like to see at least two or three, okay? And if you see at the exact same level, 2 or 3, that's considered a support, right? And resistance. So resistance is your ceiling. Again, you have a bouncy ball. You throw it at the roof. You're throwing it at the ceiling. It's going to bounce off, okay? So that's what resistance is. It's where you get a wall of sellers. These are people who are preventing the stock from rising more. So maybe a stock has gone up. It's on a very strong run, but then it gets to a point where short sellers come in. They want to take over, so they create a wall of sellers, okay? And this prevents a stock from rising more. So stocks reject from resistance. Resistance is what prevents the stock from rising more. With enough buying pressure, a stock can break resistance. Same thing as a support. If you get enough pressure to the opposite side, then a stock can break through that level. And if it does break through that level, then that old resistance becomes new support, right? So same thing, looking at this diagram here at the bottom, you can see a resistance was created. The stock was rising, and then boom, it rejects off of the same level twice. However, if it breaks through that level, it gets enough buying pressure, then now this old resistance will become new support. And same thing, you will see the strongest resistance levels at whole numbers. So strongest support levels, strongest resistance levels are always going to be at these whole psychological numbers, okay? So now let's look at some actual examples on the chart. Does that first part make sense? Okay, perfect. So let's look at actual examples from the chart. So these are support examples. So remember, support is our floor. These are wall of buyers. These are people who want to prevent the stock from falling more. So they're holding up the price of the stock at a specific level. All right, here is what a daily support looks like. So this is the one-day chart. If you're looking at this is on TradingView. So all three of us, we all use TradingView.com for our charting software. I have the premium, Unraveler, Aristotle. We all have the premium plan. Okay, so we pay, I pay like $60 a month, I think. But they actually have a Black Friday sale, which is next week. So I would take advantage of the Black Friday sale, and you can get it for like $150 for the entire year. Okay, so American Airlines is the one-day chart. Again, so each one of these candles represents a day in time. Okay, so you can see American Airlines was in a downtrend. If you look at the time frame, it started in a downtrend in June. Okay, so it just kind of started fading off all the way June, July, August. Okay, kind of like mid-July is when it bounced the first time. Okay, that's not a support yet, but then you can see when it bounced the second time at the exact same level a month later, that is what is considered a support. Okay, so the stock was falling. We bounced off. Okay, we bounced off the first time. Okay, that indicates to me we have some buyers at this like 18.30 level. And then we come back down a month later, hit that 18.30 again, and bounce off again. Okay, so that's what a support looks like. You have a stock that's falling, and then we have a wall of buyers that prevents the stock from falling even more. I just have a bunch of different examples here. All right, so same thing. Here's another support. So Airbnb was selling off all the way from like March. It started selling off, but then eventually it got to the point where buyers want to prevent the stock from falling even more. So as soon as it got to this 130 level, you can kind of see it started just kind of bouncing off multiple days in a row, actually. So we have the first day here, and then a few more times throughout that week, it bounced off that same 130 level, right? So this candle actually wicked off, and then 2 days later, it opened at that 130 and closed way higher, all right? And then calmed down 2 months later. So now this was May, we come back in July, we hit that 130 level again, and we bounce off again. So this is a very strong support right there, 130 for Airbnb, right? This is what a support looks like. It's our floor. It's where we're throwing the bouncy ball and it's bouncing off, right? This is where our wall of buyers is coming in to prevent the stock from falling even more. They really like the price point of 130, right? So they want to pick up the stock at 130 and prevent it from breaking through that level. This is a daily support. So you can see here at the top left, Airbnb, 1D, right? That means daily chart. Each one of these candles represents a day of time. So this is a daily support for Airbnb. Does that make sense? Perfect. Oh yeah, Beyond. Okay, same thing, right? Now we're looking at Beyond. This is another daily support. So we're looking at the 1-day chart, and Beyond was fading until it got to 100. Remember, 100, 200, 300, 400. You're always going to see very significant levels around these whole numbers, these whole psychological numbers, especially 100. 100 is just such a key level. and preventing the stock from falling, like Tesla 1000 a couple weeks ago was such a key level, right? So now we have beyond 100. So beyond came down, was selling off, and then it hit 100 and bounced off 1, 2, 3 different times right here, okay? So that is considered a support at 100 for Beyond. Beyond was selling off, it got to 100. We have 3 different bounces right here, all coming down to 100 and bounced off massively, you can see there, right? So that was our floor. Beyond was selling off. We had a wall of buyers at that key psychological hold number 100, and the stock bounced off. That is Beyond daily support. CAT daily support. CAT daily support. Again, the stock was selling off, and it bounced a little, like 205 right there. That doesn't count yet. Okay, so like I said, you kind of want to see 2 or 3 all around the same price. So CAT came back down, and bounced again. We have a pen bar right there. So Aristotle just talked about that as very bullish. That doesn't count yet, right? So I'm not looking at the pen bar. The pen bar helps to justify the case because that's bullish, right? So then you look at the open of this next candle. The open was 203, and we got a beautiful bounce right there off 203. And then we come back down. I don't know, I guess this is maybe a week, 2 weeks later, hit that 203 again, pen barred off. Came down 2 days later, wicked off again. And then came back down another couple weeks later, hit that 203 2 more times right there on the daily and bounced off again. All right. So that's 1, 2, 3, 4, 5 touches of 203 right there on the daily. So even though it broke through over here, there wasn't even a support created yet. Okay. So I'm not even looking, yeah, the pen bar is a bullish case, but I'm starting to look at this support from right here, from this first candle at the 203. So then we have the 203, we have the 203, they're at the exact same price. We have multiple bounces off that same level. This is what qualifies as a support, right? So here's our daily support for CAT right there at that 203. Here's another daily. I added this example because I wanted to show you how resistance turns into support, right? So 70 was the resistance here on the daily for CAT, right? The stock was coming up, and then it came up to that 70 level, which was near the high in the past, back in March. It was near the highs back there. So I think that's why it started rejecting. So we hit that 70 level. We rejected twice off of that same level on the daily right there. You can see on day 1 and day 2 rejected that 70 and sold back off. But then they had an earnings report. They had a great earnings report. So they were able to break through 70, right? So overnight, they gapped up. This is what a gap up is. This is overnight action, right? So maybe this was, it could be any day of the week, but let's say it was a Tuesday and the next day was a Wednesday, okay? So it gapped up. All of this action that you see between the Tuesday and the Wednesday is in the extended hours session. So before the market is open and after the market closes is when you see these gaps, all right? So it was able to gap up over that 70, but then it's kind of started fading back off. But again, here's what happened. So that old resistance, because it was able to break that old resistance became new support and it bounced off of 70, okay? So twice right there on the daily, you can see it bounced off 70 and that old resistance became new support. And now 70 is the new support for Snap. Does that make sense? Perfect. Yep, exactly. Okay, repeat the gap. Okay. So when you see gaps happen in the extended hours session, okay? So you guys know the market is open from 9:30 a.m. to 4 p.m. Eastern time zone, okay? 9:30 a.m. to 4 p.m. However, the extended hours session is open from 4 p.m. to 8 p.m., the after hours session, and then we also have a before market session, okay, the pre-market session, which is open from 4 a.m. to 9:30 a.m., okay? And in that time, stocks can trade. You can't trade options in that time, but you can trade equity, okay? So if you wanted to buy shares of Snapchat in the after hours or the pre-market session, you are able to do that, okay? Stocks are trading from 4 p.m. to 8 p.m., as well as 4 a.m. to 9:30 a.m., okay? There's a lot of news that's going on in that time. There's a lot of upgrades, downgrades. You know, institutes are positioning in and out of their, you know, their long-term portfolio, whatever it may be. There's a lot that's going on in the extended hour session, okay? And times like this, especially during earnings, you will see very big gaps, okay? And all this signifies is that the closing price right here, so let's say it was like 63, okay? This was day one. The next day, it opened at 74, okay? So that's what a gap is. A gap is just what happened in the extended hour session. That's all that a gap is, okay? Does that make sense? You can't predict that a stock will gap up or gap down, but you can see it happen, okay? If you're watching the extended hours and you see that, you can actually see, you can type it in on Google if you want, Snapchat, extended hours, price action or whatever. And it'll show you if it's up $3, then you can predict that tomorrow it'll gap up, okay? Now, zooming in, we can also see supports on hourly sessions. We can see supports on 15, 5-minute session. We can see it on any time frame, okay? But the difference is the daily does not show extended hours. So you can see how all of this is white. All this is white. So this is not showing you anything that's happening like with the gap right there. It's not showing you anything that happened between 4 p.m. and 8 p.m. and 4 a.m. and 9:30 a.m. So the benefit to zooming in, going down to smaller time frames like the hourly chart or the 15-minute chart or the 5-minute chart is that you can see what's going on in the extended hours session. So this yellow block, all of this yellow represents the extended hours. All this yellow represents what was happening when the market was not actually open, okay? And you need to use that data. All that data counts just as much as it does when the market's open. You have to use what's going on in the extended hours for your support and resistance levels, as well as price action, okay? So like for BABA here, now we're looking at the hourly chart. Well, this support, actually we got 169 from a pre-market session, as well as over here. So 169 was a resistance. If you're looking back all the way from the beginning of this chart over here, 169 was a resistance, and you can see how many times it actually rejected off that 169 in the extended hours session. All right, it was finally able to break through. It got enough buying pressure to break through, so it made a big move. We went from 169 all the way to 180, started selling back off, and then that 169, which was resistance, now acts as support, and that's where the stock is going to bounce off of, okay? So our old resistance of 169, which we got actually from the extended hours session, is now going to act as our new support, all right? Does that make sense? Yellow is extended hours, and we'll show you how to add this, by the way. We'll show you how to add extended hours on TradingView. We'll show you how to draw all of this for sure. Don't worry about that. Again, here's another extended hour. This is why it's important. You can't just look at you can't just look at the daily chart because it doesn't show you these yellow blocks. These yellow blocks is everything that happened overnight, right? So it's important to see also the extended hour session so you can get these support and resistance levels. So here's another big support for Coca-Cola, right? There's the 1H, so 1 hour support. Each one of these candles represents 60 minutes, 1 hour in time, okay? That's all that means. So if you see the time frame at the top left, that's how much time represents the candle, okay? So in this example, each candle is an hour in time, and 55.5 was our key support because that's where our floor was hitting. So the stock was selling off, selling off, selling off, and then we hit 55.5, and that's where it started bouncing, right? So this is where our wall of buyers came in, and they prevented the stock from falling more, and they actually allowed it to continue back up. And then it sold off again, sold off again. But boom, that 55.5 was a big support. So it wicked off, had a lot of buying pressure, and made another big bounce off of that 55.5, right? So that's what a support looks like. This is our wall of buyers. This is our floor on the stock that prevent the stock from falling more. Facebook 1 hour support. I added this one because I want to show that wicks matter, okay? So you can't just look at the body of the candle, you also have to look at the wicks. So remember, Aristotle just talked about this. Wicks represent buying pressure, okay? So Facebook was coming down, hit 373. The candle came all the way down to 373, but then it actually closed over 376, right? If you're looking at the price axis, this candle right here that came down at 373 bounced off of 373 and closed way up here at 376. And then this next candle that came down at 373, okay? Came down, wicked off. It actually opened here, came all the way down to 373, and then closed at like 377, okay? So that's why wicks matter, because they're showing you the entire price action of the candle, right? So within an hour period, you can see what happened with both of these candles. They both came all the way down to that 373 and wicked up. So that's why that's when the wall of buyers came in, okay? And that acted as a support for Facebook. So that's our floor for Facebook, right? And that's just a zoomed in version. So you can, like I said, you can see these support and resistance levels on any chart, on any time frame. So this is just zoomed in right here at the top. You can see Facebook, it says 5. So this is the 5-minute chart. Each one of these candles represents 5 minutes in time. So we just are looking at the zoomed in version. So the stock came down, hit the 373. That doesn't mean anything to me yet. Okay, sure, it bounced off 373, but will it bounce off again? Well, here's day 2. We hit that 373 again, and boom, bounced off very strong off that 373. All right, this 373 is now considered support on Facebook. Here's an intraday support. So this is, again, another 5-minute chart. I'm just showing you guys a bunch of different examples so you can see and get a great idea of what support and resistance is. So here's an intraday support for AMD, was selling off, selling off, selling off, selling off. Finally, it got to 105.5 and buyers decided, you know, I don't want to see this thing sell off anymore. So that's when they started buying it up. So they started buying up at 105.5. It came back down again like 30 minutes later to retest that 105.5, and they picked it up again, right? So that's going to act as our support. When you see a shift in momentum, right, you see a lot of selling, but then people start to buy it up. They're preventing the stock from falling. That's where your support is going to be. Same thing here. Amazon, $34.96. So kind of sold off that first candle. Again, this is a 5-minute chart. Up there at the top, you can see 5 minutes. So this is an intraday support. So it came down to $34.96 and bounced off. It's not a support for me yet, but you definitely want to check it out to see how it reacts to that level later on. So it came back down to that $34.96 and bounced off clearly another $20 right there. All right. So that's our floor for Amazon. That's going to act as our support for Amazon. Now let's look at resistance. Support made sense, yeah? No, it's not automatic. You draw the line yourself, and we'll show you how to draw the lines on TradingView. Sweet. Let's look at resistance. So resistance, our ceiling. Now we have our wall of sellers. These are people who are preventing the stock from rising more. All right? Baidu daily resistance. So the stock was selling off, and then it started pulling back. We hit 170 and rejected, right? It's not a resistance yet. We just have one rejection at 170. Sold off more, came back up, and now we have this candle right here with the wick off, right? So that's actually a bearish pen bar right there with a wick off of 170, right? So rejection 1, rejection 2, that's going to be considered a resistance on the daily chart. You can see up there at the top left, 1D, daily resistance. Multiple rejections at the same price, especially if it's at a whole number, that's going to act as a resistance. Same thing here, GS, daily resistance. So the stock was coming up, coming up, coming up. And by the way, you won't always see it at the exact same level. It can be, pretty close. Sometimes it's, especially with our bounces and rejects, it doesn't hit the exact level we're looking for, and that's fine. It's just like an area of supplier demand when sellers or buyers want to reject or prevent the stock from rising and prevent the stock from falling. So like with this Goldman Sachs example, yeah, it was coming up, coming up, coming up, basically got to 420 on this initial one. But if not, on the next 3 days right here, we rejected off 420, 3 days in a row. You can actually see it came up, rejected 420. The next day, it came up, closed at 420. And then the next day, opened at 420 and closed down here at like 412, right? So that's 3 rejections in a row right there on the daily at that 420. That's going to be acting as a resistance. Coca-Cola, 57.5. So again, the stock was coming up, and then sellers decided to step in. They wanted to prevent the stock from rising more. So we rejected 57.5. 3-4 days later, came back up, 57.5, rejected that exact same level again. A week later, 2 weeks later, came back up, and there you go, rejected that exact same level, 57.5 again, all right? So that's what a resistance looks like. It's the exact same thing as support, it's just the opposite. So now we have our wall of sellers that are preventing the stock from rising. Here's another resistance example. So Lowe's had great earnings. They made a nice run up, but then of course, people will start selling out of the positions and short sellers will come in, market makers, whatever, will prevent the stock from rising more. So we have a 209.5 rejection 1, and 5 days later, 209.5 rejection 2, all right? There's our resistance right there for Lowe's on the 1 day, 209.5. 230.3 NVIDIA. Again, same thing. So now the stock is rising, rising, rising. Eventually sellers start to prevent it from rising even more. So 230.3 and the stock rejects. Came up a day later, and you could just consider this 230, same thing, right? So a few days later, it came up to 230 and rejected that the exact same level as before, right? So that's what a resistance looks like on the daily. Now here's some resistances on the hourly. So same thing that we were just talking about. You're looking for a stock to rally, Eventually it starts to hit a level where sellers want to prevent it from rising even more. So 157.25 rejected here on the hourly on the daytime. And then in the extended hours session, came back up to retest that 157.25 and slammed against it. So rejected again at that 157.25. So that's going to be our resistance for Apple. mRNA, 1 hour, 440, right? So the stock was coming up, hit this keyhole level, 440, and rejected off on the hourly right there. 382.75 on the QQQ. Again, at the hourly, coming up, reject once, looking for another reject. 382.75, rejected a couple more times over there. So that's going to act as our resistance. Okay. And there's just a zoomed in version of that. Zooming in on the 5 minutes. So you can see these levels on any time frame, like I said. Here's kind of an intraday resistance for Disney. And yeah, it's only 2 rejections right there at the 187.5, but you can see how the stock just made a complete 180, okay? So that 100% is going to be a resistance. You know, you don't always need to see like 3 or 4 rejections or 3 or 4 bounces if you just see the stock completely change momentum, right? So Disney was making a nice run. We opened 184, made a nice run to 187, and then just completely made a 180 and slammed down off of that 187.5. So for me, yes, I would consider this a resistance right there on the 5-minute for Disney. So putting it all together, well, let's look at the hourly. I really love the hourly chart. I said that I really love the hourly chart, and I'll focus a lot on this. Every morning I watch the hourly chart. You can see all the extended hours data. You can see everything that's been going on in the past week or two. All right. So you can see we have a resistance and support. The stock is ranging between the two. So this was Tesla, 1 hour. Okay. And here's our support. This is our floor, our 725. So Tesla made this support as the days were going on. So this is 1, 2, 3, 4 days of data right here. So 740 started rejecting on day 1, right? We have 2 rejections on the hourly on day 1, 740. The next day we came back up to that 740 and rejected again. The third day we came back up to that 740 and rejected again, right? So this is our resistance. And like I said, it doesn't have to be at an exact level. It can be kind of a zone, right? This is our zone of sellers right here around 740, right? And then we have our zone of support down here around 725. So we kind of bounced off it the first day. The second day in the extended hour session, we also bounced off that 725. And then on day 4, we bounced off multiple times off that 725, right? So 740 was our resistance. 725 was our support, and this is called ranging stock. This is called a sideways trend or consolidation. So a lot of different terms for it, all right? So what you're looking for in a scenario like this, when you see a stock ranging between 2 levels, a key support and a key resistance, you're looking for a breakout to either side. It doesn't matter which side, you're just looking for a breakout. And this scenario, it happened to be a breakout to the upside. So it was able to break that resistance. That's when a lot of buying pressure came in and made a big high 765, nice $25 move. You can see the big move that it made when it broke out of that 740, all right? So you're looking for a resistance breakout, and that's when you can take the stock long and pick it up on dips, right? And you can also see what happened. So 740 was our old resistance. After it broke through 740, it was able to trickle back down. You know, it faded back down to 740 and bounced off of 740 again. So our old resistance became new support, right? So this is how I'm showing you how you can put it all together. Old resistance becomes new support. Same thing if it would have broken 725, then you could have taken it short, right? And then as soon as it gets back to 725, that old support will become new resistance. Right? So does support and resistance make sense? Perfect. Awesome. All right, well, that's support and resistance.